Strategy Number One on the 10-minute chart. This is day 6, and once again, the purpose is not to predict the market. The purpose is to prepare the setup correctly, follow the movement as it appears on the chart, manage the position with discipline, and record the final result honestly. Every movement described here comes directly from the visible chart. We are ignoring the original audio and concentrating only on the reference lines, pending order structure, price action, trade management, session cutoff, and final spreadsheet result shown in the recording. At the beginning of the video, we are preparing a fresh trading session. The chart is cleared, the new day is identified, and the trading area is brought into focus. We are working with EUR JPY, and every candle on the chart represents 10 minutes of price movement. The new session begins at midnight London time. We draw a vertical line at the start of the day and identify the opening area of the midnight candle. This price becomes the reference point for our first setup. The reference level is marked close to 185,003. From this point, the two-sided breakout structure is prepared. A buy stop order is positioned approximately 15 pips above the reference, near 185.151, and a sell stop order is positioned approximately 15 pips below it. Both sides are prepared before the market chooses a direction. The upper order gives us access to a bullish breakout, while the lower order prepares us for a bearish move. We do not guess which side will activate. We simply define the levels and allow price to make the decision. The trade box is then adjusted around the long entry. The protective stop is placed roughly 30 pips below the entry, and the profit area extends toward a target of approximately 60 pips. The risk is visible, the potential reward is visible, and the complete trade structure is defined before the position becomes active. Everything is now in place, so the replay begins. During the first hour, EUR JPY starts to move higher. The candles climb away from the reference area and approach the upper pending level. At approximately 1 a.m., price reaches the buy stop order. The long position is activated. At that moment, the opposite sell order is no longer required. The market has selected the bullish side, and our attention now moves completely to the active long trade. The first movement after entry is positive. Price rises above the entry level and begins building a small amount of open profit. The candles are not especially large, but the structure is gradually moving upward. There is no reason to interfere with the position. The stop remains below the entry, the target remains above, and the trade is given enough space to develop. As the early morning continues, price advances steadily. There are several small pauses, minor pullbacks, and periods where the candles move sideways, but the overall direction remains constructive. This is an important part of live trade management. A profitable trade does not always move directly toward the target. The market can pause, retrace, and test the trader's patience before continuing. The long position remains active, and EUR JPY continues to hold above the entry. Through the next several hours, the market forms a gradual series of higher movements. The progress is slow, but the trade remains positive. Price approaches the first important profit milestone. Eventually, the position reaches approximately 30 pips of open profit. This is the moment shown on the chart where the protective stop is moved to break even. The stop is brought up from its original location and placed close to the entry price. The original downside risk has now been removed. If the market reverses completely from this point, the position should close near the entry rather than producing the original full loss. The trade is now protected, while the upside remains open. This adjustment changes the character of the position. Before the 30-pip milestone, the trade still carried its original risk. After the stop is moved to break even, the account is protected from a normal full stop outcome on this setup. The market continues, but the path is far from smooth. After moving into profit, EUR JPY begins to fluctuate. Price rises, pulls back, and then moves sideways again. Several candles show longer wicks, which tells us that buyers and sellers are competing strongly. The position remains open, and the stop remains at the protected level. Later in the morning, the market experiences a deeper decline. Price gives back a significant part of the open profit and moves much closer to the entry area. This is a tense moment in the trade. The earlier gain has been reduced, and the market appears capable of returning all the way to break even. However, the stop has already been adjusted. There is no reason to panic, widen the risk, or close emotionally. The plan is already doing its job. Price approaches the lower part of the profitable zone, but does not close the trade. Buyers begin to return, and EUR JPY starts recovering once again. The recovery develops gradually. The candles move back above the middle of the range, and the long position begins rebuilding its open profit. As the afternoon approaches, the market becomes more active. Price rises toward the earlier highs, pauses, and then produces another bullish push. The chart now shows a clearer upward direction. EUR JPY moves through the area around 185.44 and continues higher. The trade has recovered from the earlier pullback and is now moving deeper into profit. The position remains protected at break-even, and the target remains above the current market. During the later part of the session, bullish momentum becomes much stronger. Price accelerates upward, producing a sequence of larger candles and quickly expanding the open profit. The market rises through 185.50 and continues toward the upper part of the trade box. This is the strongest movement of the day. The long trade, which began near 185.151, is now approaching a gain of approximately 50 pips. Price reaches the area around 185.64 to 185.67 and begins consolidating near the session high. The full target shown on the chart is higher, close to 185.759, so the complete 60 pip objective is not reached during the recorded trading window. However, the market has delivered a strong and valuable move. As we approach 7 p.m. London time, EUR JPY remains near 185.65. The long position is showing approximately 50 pips of profit. The trading window has now reached its cutoff, and the result recorded for day 6 is a gain of 50 pips. This session contains one activated trade, one long position, no losing trade, and a final positive result. We now move from the chart to the performance spreadsheet to calculate the financial outcome. The starting balance for day 6 is 1,750 euros. The recorded position size is 5.3, and the trading result is plus 50 pips. The spreadsheet converts those 50 pips into a profit of 435 euros. This gives an effective value of approximately 8.70 euros for each pip during today's trade. To confirm the calculation, 50 pips multiplied by approximately 8.70 euros per pip gives a total of 435 euros. We then add the 435 euro profit to the starting balance of 1,750 euros. The new ending balance is 2,185 euros. Day 6, therefore, increases the account by approximately 24.9% in a single recorded session. We can also review the progress of the full test. The account originally began at 1,000 euros. After the day 6 result, the balance stands at 2,185 euros. That represents an overall increase of 1,185 euros. In percentage terms, the account is now approximately 118.5% above the original starting balance. The balance has more than doubled during the recorded sequence of trading days. However, the most important part of this video is not only the final number. The session demonstrates the value of preparation and patience. The reference point was marked before the trade developed. The pending levels were placed before the market selected a direction. The long order was activated at approximately 1 a.m. The trade was allowed to move through several hours of slow progress. When the position reached approximately 30 pips of profit, the stop was moved to break even. Later, the market produced a deep pullback that tested the protected position, but the strategy prevented an emotional reaction. The long trade survived the retracement, recovered, and then accelerated strongly during the later part of the session. By the cutoff, the position had produced approximately 50 pips. This is an excellent example of why trading is not only about finding the correct direction. It is also about giving a valid trade enough time to develop, protecting risk at the appropriate moment, and remaining calm when open profit temporarily decreases. A trader watching only the short-term candles might have closed during the morning hesitation or during the deeper afternoon pullback. The strategy, however, kept the decision process structured. The entry was defined, the protection level was defined, the target area was defined, and the final result was recorded without changing the story after the event. Day 6 closes with one successful long trade. The pip result is plus 50. The financial profit is 435 euros. The starting balance was 1,750 euros. The ending balance is 2,185 euros. And the account now stands 1,185 euros above its original 1,000 euro starting point. This was a strong trading day, but it also required patience. The trade remained open through slow movement, consolidation, a major pullback, recovery, and finally a powerful late session rise.